Business Focus with Kudzie, Sharara on the Champions League Breakfast.
It is a Business Focus. We get to discuss a lot of what's happening in the world of business. You have questions to do with business. Feel free to drop them up on our WhatsApp platform 0719 100404. And Kudzie will help us understand. Good morning to you, Kudzie. How are you doing today?
Good morning, Tinashe. Good morning, everyone. I hope your weekend was great.
Yeah, my weekend was great. It was fantastic. Looking forward to yet another great, fruitful business week. Kudzie, let's rewind and go back to Friday and check out how the Zimbabwe Stock Exchange traded.
Thank you, Tinashe. So the ZSE continues to trade sideways, despite quite a number of results that we are seeing, which are really good. Especially when you consider that most of the companies that are reporting are actually declaring dividends. You would naturally expect the market to react to that, but there are two things. Markets react to micro fundamentals, which is your company-specific fundamentals, but markets also react to macro fundamentals, where you're looking at the general economy or other economic indicators or economic policies. The market also reacts to that, and it seems like since the market, we saw the numbers coming through, the earnings numbers from various companies, I think it's safe to say that the market is at the moment more influenced by macroeconomic fundamentals, especially the monetary policies at the moment. I believe that it's mostly the monetary policies that are determining the macroeconomic environment with regards to the Zimbabwe Stock Exchange, where the amount of ZIG that is in circulation has not been enough for, maybe you could say, there isn't much to save, because you need to save and then invest. And you need also to be saving in ZIG for you to be able to invest on the Zimbabwe Stock Exchange. So you might have pension funds, but if those pension funds are probably getting their contributions in US dollars, you are unlikely to see then movements on the Zimbabwe Stock Exchange. So we continue to see the market trading sideways with a bias towards the negative. So on Friday was no exception, with the all-share index losing 0.51%, the top 10 index coming off by 0.41%, and the rest of the indices also closing in the negative territory, but with less than 1% drop. And just looking at the counters that dragged the market lower, Nampec continues to swing the blues, down 14.97%. We know that the company is about more than 51% of that company is up for sale, following the collapse of the deal with TSL. So a larger stake of the company is still on the market, and it lost about 14.97% on Friday. And then you also have Deribot coming off by 14.93%. I'm not sure what investors are seeing there, because the numbers that were released by Deribot recently for the half year to June were not that bad. Although the company, unlike the others that are paying dividends, the company decided to keep whatever profits that it made and the cash that it had for reinvestment into the business. So 14.93% drop in Deribot. Art also coming off by 14.64%. It's been a while since I saw any numbers from Art, or since I saw any update from Art. Maybe it's a company that we haven't followed that much, but it was one of the losers, down by 14.64%. South Africa continues to yo-yo with a 13.35% drop, and then Econet shedding 2.79%. And I believe that Econet is mostly, for me, I think it's a bit of profit taking. If you look at most of the heavyweight counters on the Zimbabwe Stock Exchange, they are flat to negative, but Econet has been one of the outstanding performers with a more than 40% gain in year to date. But so I believe that there is some bit of profit taking in OK Zimbabwe there. And on the upside, the market was not short of risers, with OK Zimbabwe putting on 11.42% as the counter, or as the company continues to battle to return to its former glory. And so that's OK Zimbabwe. They also released their numbers recently, showing that things have not yet improved at OK Zimbabwe, as Willard Zureva, the CEO, and his team try to stabilize the ship. And then also on the upside was Ariston putting on 3.2%, NMB adding 1.7%, EBZ up by 0.6%, and then Tanganda adding 0.22%. So that's basically how the Zimbabwe Stock Exchange traded. And maybe just to highlight one of the counters that is listed on the Zimbabwe Stock Exchange, that's the Tigere rate. That's Tigere Real Estate Investment Trust, coming up with their trading update for the period ending 30 September. So whilst we are talking about half-year results to June or full-year results to June, is already out with its trading update for the 3 months to September, where they are telling us that their net property income, which is their income when they compare the period to 30 September 2025 versus the period to 30 September 2024, you'd see that their net property income grew from 1.3 million to 1.7 million. So they've managed to increase their net property income there, and also that resulted in the company paying a quarterly dividend of $519,100. So about $519,000 there being shared by the unit holders of Tigere Real Estate Investment Trust. And like we have highlighted before, the Real Estate Investment Trust is where fund, for example, the fund manager in this case, put together some properties. You know, some of them, Highland Park is one of those properties. Kona Chinamano is another property, and they are also in the process of also putting into this fund the Greenfields there at the showground. Greenfields Mall is another property that they are aiming to put into this real estate investment trust. But by the listing requirements, whatever profit that they make, they are supposed to net profit that they make, 80% of that profit will be shared amongst unit holders. So every quarter, what we have seen so far with regards to Tigere Real Estate Investment Trust is that they always pay a quarterly dividend. So for those who are investors in this particular real estate investment trust, they are going to share that $519,000 US dollars as quarterly dividend. And according to the proprietors of this particular fund or REIT, they are saying that portfolio occupancy at Highland Park Phase 1 dipped slightly to 98.7% due to a nominal planned vacancy brought about by a tenant change. So there was a tenant change there, and obviously that's resulted in the vacancy rate coming slightly down. And so that's it's also interesting that they're developing just opposite Highland Park. They're developing Highlands Precinct, and the bridge is already up. Which links the Precinct as well as Highland Park Mall. So that's Tigere REIT, another one that has been interesting to keep an eye on. So that's it when it comes to trading on the Zimbabwe Stock Exchange.
Okay, great and well said, Kudzie. 8 minutes before 8 a.m. is our time on Business Focus. There's a question here, Kudzie, on WhatsApp which says that is it true that Pick n Pay is withdrawing from TM supermarkets?
I haven't heard that kind of news. I'll keep tabs. I know one of the executives at TM Kamu is always listening to Business Focus. Maybe you're giving me an update in terms of whether there is indeed that pullout, but I doubt it. Although you never know, but I doubt it very much.
Okay. Thank you so much, Kudzie, for that one. It's been a long time, Kudzie, since we last spoke about the state of the manufacturing sector in Zimbabwe. Where are we as a country?
Thank you, Tinashe. So the only way for us to know what's happening in the manufacturing sector is when those who are mandated to do the surveys and stuff do so. So in this case, Zimstet did their survey, and this is for the quarter ending June. So this is the second quarter of the year. So the numbers we are sharing are for the second quarter. Things might have changed between June and September, which is the third quarter, but the numbers for the second quarter are the ones that were released last week by Zimstet, and they do not show a good picture of the state of the manufacturing sector. So in terms of capacity utilization, in that respect, I think there was a slight improvement because the capacity utilization in the second quarter was at 48.2% versus 47.7%. So there was an improvement there, especially for large manufacturing companies where the second quarter capacity utilization was actually at 57% versus 53.2%. And this is for the large manufacturing companies, whilst for the small and medium companies in the sector, capacity utilization was at 46.5%. That's why the overall was then 48.2%. So in terms of that capacity utilization, I think the sector is doing well. But there are other indicators that we then look at to also give us a picture of what's really happening in this sector. And one of the key indicators that we should always keep an eye on is what is known as the Purchasing Managers Index. The Purchasing Managers Index is one indicator that we should always keep an eye on, because it gives us an indicator of the thinking. In fact, it's a key economic indicator that provides a measure of the prevailing direction of economic trends in the manufacturing sector. So it's a key indicator that you should keep an eye on. And on that one, let me give a bit of more insights on that one. So if the Purchasing Managers Index is above 50, it means the sector is growing. If it is above 50, it means the sector is growing. If it is below 50, it means the sector is contracting. And according to Zimsted, Purchasing Managers Index for the second quarter of the year was at 40, up from 34.5%. So it was at 40, up from 34.5 points, not percent. So again, like I said, if it's below 50, it means the sector is contracting. So in this case, it's at 40. It means the sector is contracting. However, the rate at which the sector is contracting has declined from 34.5 to 40. So it's no longer declining at a faster pace. However, the Purchasing Managers Index is below 40, so it shows that the sector is contracting according to the numbers released by Zimsted last week. And the main factors affecting production, one that was cited by those in the sector is that cash flow difficulties. No, so you find that cash flow is like the what can I call it? Cash flow is like the oil that you need for any business. You need cash flows. You might make sales in our shares, sell as much as you can, but if those people that you are selling to are not giving you cash, you are likely to face cash flow challenges where you can't replace the stock that you have sold with new stock. So you must always have a cash flow. And one of the ways of making sure that you don't suffer cash flow challenges is probably going to your bank, get some loan or an overdraft. But with loans as high as 35% for ZIG and as high as 18% for ESD, you find that companies are not resorting to the bank to get to oil their businesses. So cash flow difficulties is one of the challenges there. Shortage of electricity, again, is also being cited. In the neighborhoods, we know electricity is something that you rarely see these days. It comes when you're almost about to go to sleep, and by the time you wake up, electricity is gone. But for business, again, it's also a challenge. And then also uncertainty of the economic environment is one of the indicators that were cited by those that were surveyed. So not looking good there in terms of the Purchasing Managers Index, as well as the challenges that are there. And then also another indicator, Tinashe, is the general, which may be because of time, is the last one that I'll talk about, the general business climate, where most of those in the sector, about 59.3%, they are saying the general business climate has not changed, 59.3%. However, 15.4% are saying they are pessimistic about the business environment, whilst 25.3% are optimistic about the business environment. One sector that seems to be facing a lot of challenges, where 30% were pessimistic, is the textiles and ginning sector. That one seems to be performing badly, whilst the food and furniture is the tobacco and beverages. The tobacco and beverages is the most optimistic of them all. So those are the numbers that came from Zimsted last week.
All right, Kudzie, well said. There are a couple of questions that have been coming through on our WhatsApp platform. I'm trying the best I can to forward them to you, so probably you can pick up a topic to discuss on some of them. Because of our time, we won't be able to look at them right now. But all the same, thank you so much for Business Focus for today. Have yourself a great week.
Thank you, Tinashe.
Business Focus with Kudzie Sharara on the Champions League Breakfast.